Hello everyone, welcome back to the channel of Crypto Crayfish. Today we're going to talk about Bitcoin, the last chance. We'll talk about this latest pullback, how volatile it's been, what it means for the crypto market as a whole, what it means for altcoin season, and what you can expect next. Stick around for a special surprise at the end that should help you navigate these especially volatile times, and hope you enjoy the content. Thanks so much for your support. All right. So we're going to start by talking about the market now. I'm sure many of you are feeling fear, uncertainty, and doubt. I'm sure there's a lot of questions about why we started the week at over 102,000 on Bitcoin, and now we're down to the lower 90s. And I'm sure a lot of you are feeling a little bit disappointed, a little bit helpless in this market right now, because of how challenging a past month or month and a half it's been. So we'll start off by talking about painful market psychology. There's something we say in psychology, which is hope is the gateway to disappointment. Now it's a little bit cynical, but it's really, really true, right? In a lot of ways, we're at the same prices that we started early December with, and we've gone nowhere. And that's not negative, right? In a lot of ways, that's totally fine. You would expect consolidation in a healthy market, especially with the stock market going down these last few weeks. You know, Bitcoin and the crypto market is actually doing okay. But because we had those volatile moves up over 100, it feels much more painful than that. It feels much easier to get disappointed, and it feels like the market is really down in the dumps. And that's quite hard. That's quite hard to navigate. It's quite hard when you think you're going to get a mental break. For example, earlier this week when we went over 102, I really thought, okay, I can breathe now, have some positive, have a rest from some of the negative feelings or worries about the market. And instead, it just ended up being a fake out. We're right back down to the low 90s, and it's challenging. And I'm sure you all have felt that. This is coupled with a lot of negative news. There is a ton of negative sentiment around the internet right now, and that includes, some of the major traditional finance sites like CNBC and such. But I just want to show you a little YouTube search I did because I think it was really illuminating. I literally just went to YouTube today and just searched one word, crypto. Okay, let's just scroll through and see what the top channels are putting out. We're starting off with I'm worried in all caps. That is Crypto Banter. Then we've got Altcoin Daily, arguably one of the biggest channels. And we've got Crash in big red block letters and a worried face. We've got Shit Not Again from Lark Davis. We've got a trap signal. We've got Bitcoin and crypto really rally halted by this, by CryptosRUs. And we got Coin Bureau, one of my personal favorites to watch just because I feel like they're easy to critique and I find them interesting, saying Bitcoin's 2025 rally is in danger. Watch before it's too late. That's a pretty bold statement. I have, at least perused through the majority of all these videos, and they're all kind of saying the same thing, which is, oh gosh, did we get it wrong? What is this market cycle telling us? What is the price targets telling us? Some say, for example, Altcoin Daily says it's overblown. Some, like Coin Bureau, I was shocked actually to have them actually take a counter stance. They decided to put out a video essentially describing what could lead to a failed post-halving year for the first time for Bitcoin. And I thought that was an interesting choice by them. I don't think it's likely at all. And in fact, I think it's just kind of fear-mongering and feeding into that. And so we'll talk about why I think that's a little bit ridiculous and kind of just adding more uncertainty, fear, and doubt into the market than maybe is necessary. I think there's already kind of plenty around. There are some concerns. There's always going to be concerns, but overall, I think the market is quite healthy. And actually, I think your timing here is pretty beautiful if you're looking to get into this rally for 2025. and not be FOMOing in as the price goes explosive, which I think you're not going to have very many chances. Hence, why this is the last chance. I can't tell you exactly when Bitcoin's going to go on another parabolic run, but I can tell you that it will likely be sooner than a lot of people think. And I'd be surprised if it's not in Q1. So I think you have a very limited amount of time, and it could be as early as tomorrow or more likely Friday because of data coming out. All right, let's talk about macro uncertainty. So there's been a lot of macro uncertainty going around. The stock market has been struggling. I can show you a little bit of a chart on this. And if we just pull up the S&P, you can see since our top on December 6th, we've really had some pretty strong volatility. And it's been quite scary for stock investors, right? We got this severe kind of sudden market sell-off into a bounce, into another sell-off, into a double bottom, into a bounce that, again, people were like, oh, back to all-time highs. And again, we're looking to kind of retest those lows. So the macro uncertainty is there. If you haven't looked into all the news, basically what's going on is people are worried that the economy is too hot. They are worried about inflation reaccelerating. They're worried that unemployment numbers aren't going up. Again, we don't want employment to go up too much, but if it doesn't go up at all, there's worries that the Fed could really completely stop cutting rates and all sorts of things that might put challenges, especially on risk assets. So that's kind of what's been going on. That gives you an idea. And overall, I think the macro is more of a blip. I think, could we get a recession at some point? Sure. Could we get a scare? But overall, I think it's a little bit, the fears of, reinflation now are overblown. I think it's unlikely that it's going to be so soon. I think we could get reinflation into later 2025. But I think for this first quarter or 2 quarters of 2025, we are looking actually pretty bullish, especially into the Trump inauguration. So I'm not too worried about it, but it has been dragging on Bitcoin and the rest of the market. For example, the thing that arguably took crypto down from 102 or Bitcoin down from 102 to lower 90s was this hotter than expected print coming in on the labor market that actually was, retaining jobs better than expected. And so that's something that the market's just trying to make up its mind. It's pretty normal as far as this time in the cycle. And there's going to be, as far as having some consolidation, I actually think it's healthy. It's just there's so much leverage and uncertainty in the market that it's really whipsawing around. The other thing I would say that I think is valuable is there's a real lack of patience, especially in the crypto market, but even for stock markets and those types of things as well. You're seeing a lot of leveraged ETFs. You're seeing a ton of options. People want their gains and they want them now. And that goes for crypto especially. People, we've been arguably in a sideways market. Yes, volatile up and down, but arguably sideways for the last 4 weeks. And people are acting like we're starting a new bear market, like we failed the cycle, like there won't be new all-time highs. And I just think that's completely ridiculous. It's important to remain patient. Remember, crypto, as far as the market goes, really moves quite fast. And you just got to give it some time. Give it some time to work. Don't get too locked into the day-to-day, which I know is hard because you've got money on the line and you're seeing headlines and you're seeing all the news and all those types of things. But I think that's really what's important. All right, the other thing I'm seeing is market cycle determinism. I think, the crypto market is arguably a little bit more developed now and has been around for a long time, that there's more and more people who know about market cycles, know when things seasonally tend to do well, And what that means is likely we're going to see some shifts in that. I don't think I'm a big fan of market cycle theory. I don't think it will break down. I think in a lot of ways it will just keep doing the same thing it's always done. But I do think it will surprise people, because if a majority of crypto investors start to expect something, you can expect that to change, right? If the majority of people think, okay, we're going to get a bull run now, and have already done all their buying in preparation for it, then suddenly there's not anyone buying to start the bull run or to continue the bull run. So it kind of is a self-determining prophecy where if you're expecting the market cycle and everyone's expecting the market cycle, then the market cycle changes. Again, I don't think it's going to change on a broad scale. I just think for the short term, that's some of what's going on. Is everyone's like, oh, it's January, time for altcoins to go crazy. And I think that's not necessarily, doesn't have to happen immediately, right? There has to be catalysts, things have to line up, there has to be buyers, all those types of things. Let's talk upcoming catalysts. So things that could move the market in the short term. The main one you're looking at tomorrow is a closed stock market day because of Jimmy Carter's death. And then the day after is our labor market unemployment statistic for the month. And that will be a big deal. That one likely, I think, will create some strong volatility in either direction. It could either kind of reverse the negative move we've had this week, and send us back to over 100 on Bitcoin because they realized that, our inflation worries were overblown. The labor market is softening, all those types of things. Or it could potentially, accelerate that move to the downside if the market gets continued support for that idea that it's not liking right now. And you just have to be prepared for that. Either way, it will be okay in the long term. I would try and just, not trade it, not focus too much on it. Just know there's likely going to be some volatility on Friday, and that is okay and expected. All right, let's move forward a little bit now to zooming out. I think this is really helpful when the market is so challenging, and there's a bunch I want to show you all that I think is helpful. All right, we're starting with market cycles. So I'm going to go over here to intothecryptoverse.com, which is created by Benjamin Cohen. If you don't know him, go check him out. He's a great YouTuber. And I want to give credit where credit is due. We're going to be using this on the channel a fair amount because it's quite helpful to visualize things. So the first thing I was going to show you all is ROI after market cycle bottoms. So what does that mean? Return on investment after the cycle bottoms. And this shows you all the different market cycles. Here's market cycle 1 for Bitcoin. I'm going to actually turn off market cycle 1. It was extremely volatile. It's over 10 years ago now. I don't think it's super, super relevant. And you can see the rest of them. So you can see how we're kind of in these diminishing returns, right? Every cycle has a lower ROI from the bottom. But you can see how our purple line, which is market cycle 5, is tracking almost perfectly last cycle and the cycle before it. So we're really just right in the perfect mix. And so it can feel like the market's falling apart. But when you look at this, everything is where it's supposed to be. And, we've got over 200 days likely till the top of the market cycle. So just remember, there's time. It doesn't have to happen tomorrow. I think that's important to point out. You can look at some of the other ones, Ethereum. Here's the first market, second and third. We are definitely underperforming on Ethereum, and I think that will click back. Something that's dubious at best, but I think helpful to look at, is if you remove the first market cycle for each of them, so Bitcoin and Ethereum, both the first are removed. Now let's look at the return on investment at the peak on I guess that would be the second market cycle for Bitcoin. And you're looking right at about 418. Then you go to the next cycle, and it's going to come in right at about 110. So it's a little under, if you divide by 4, right, you're going to receive that ROI, a little under. Now let's go to Ethereum. You've got the second market cycle, which is this red one here. It's coming in right at around 58. at the top. And if we divide that by 4, roughly, we're going to get right around 14. And that theoretically would be what you can kind of expect for an Ethereum market cycle this time. And that puts you all the way up here, guys. I mean, 14 from the bottom, which was around $900, is going to put you at, 12, 13,000. I don't know if that's possible. Frankly, I think that's a little bit high. But it just shows you that, we've kind of seen these types of moves happen before, and they're not unheard of in crypto. And additionally, if you look at Bitcoin, whenever there was huge deviations between cycles, so take, for example, this green cycle that was market cycle 4, which was last one, it got way ahead of market cycle 3. And then you see it come back together. And it can take time, but it usually comes back together, and then peaks out to a little bit of diminishing returns, but nothing massive. You will likely see the same on Ethereum. We will likely see starting to outperform the past cycle to really catch up here. It may not ever catch up all the way because we'll likely get some diminishing returns, but it will likely close this gap a fair amount. So those are just things that are helpful to point out. To kind of zoom out, think of things. You can look at the risk metric, which I think is helpful as well. And this really shows you, we're coming in at 0.582 risk here, guys. That is not market cycle top material. We've got some time. It can be healthy to have those pullbacks. Ethereum's at 0.579. So these are those kind of things that are happening. They're really useful, and I think really helpful to just zoom out and be like, okay, we are still very much kind of trading in the normal zones, and there's nothing to panic about, even though it feels so scary in the short term. As for macro, zooming out on macro, again, I think overall our macro condition is really healthy. The US economy is strong. We're seeing some rate cuts that actually we don't need to cut rates as quickly because the economy is so strong, which is great for the Fed. We're not seeing inflation, really reaccelerate at this point, which is great. So a lot of things are really looking quite strong, and it's normal for the market to have blips when, say the yield curve uninverts, which it did last month. So those are the types of things. I was going to pull it up for you, but we've talked about it before. Those are the types of things to really zoom out on macro and say, okay, are we headed into a recession right now? How are the data prints? Really, things are looking pretty great. And the market can freak out in the short term, but I think in the long term, we're not getting any major recessions that I see on the horizon. All right, sideways prices. This is one where, again, it feels like it's been such a negative market. It feels like December was absolutely brutal. And then you just kind of zoom out. You look at, wow, TradingView has a lot of things right now. You zoom out and you look at this chart, right? And, here's end of November. We're at this, we're literally at the same level as end of November. We were here at this level on November 21st and November 25th and November 27th and November 28th and December 2nd and December 4th. And I'm not going to do them all. But the point is, you can see we're basically just going flat. And yes, there's big peaks and troughs, but overall, the market has not been extremely depressive or negative or bearish. So just keep that in mind. It can feel really whipsawy and brutal, but in reality, we're just kind of consolidating, and that's okay. All right, investing versus trading. Remember, kind of what we're talking about on this channel mostly is investing versus trading. So we're not looking for those moves tomorrow, this week. We're looking for the next few months to, up to a year. And that is super helpful to kind of put in perspective because it doesn't really matter what happens in the short term. Unless you get some major black swan or something that's going to liquidate you, you're totally fine. And the whole point of this channel is not predicting, but waiting for what likely happens in the crypto market, which is seasonality and these 4-year market cycles. So we're just waiting for when that happens. It doesn't have to happen when we think it should. It'll just happen when it chooses to happen. And we're ready to capitalize on that, or at least I am, when it gets there. Last thing to say, pull it together. This is important. I think that a lot of people are starting to lose their minds a little bit. And I am saying this to myself as well. Just, feel free to turn it off. Feel free to go elsewhere for times. There's nothing to change at the moment. There's no new information. And the one thing I would say too that I think is a really valuable way to think about things is narrative in my head follows price. Meaning if the price goes down aggressively, the market's going to find a narrative to explain that, and vice versa if it goes up. And that is the opposite of the way most people think about it, of narrative hunting and looking for the next big thing, what's in the news, and then trying to predict what it'll do to the price. If it's in the news, it's in the price. I would just, follow the price historically and do things based on that versus all the news, because there will always be new news to explain what is happening in the price. All right, let's get to our surprise for the day. We are going to do a visualization. And if you don't know what visualization is, it's something that's been proved by science to really help performance in a lot of different realms. If you don't know, a lot of my education and work background is in sports psychology, and visualization is absolutely huge for athletes. And it's been shown to actually activate all the same parts as doing an activity. So say you visualize swimming your 100-meter race. It will activate all the same areas of your brain as when you are actually swimming that race, when you are actually practicing to swim that race, all those types of things. And therefore, it can markedly increase performance. This goes for business as well. It goes for a lot of different areas. And what I've noticed is it's not used in finances at all. I've never seen it used in finances. And it totally should be. It can be super helpful. And financial markets, at the end of the day, are psychology. And visualization is working on that psychology. So I've decided that it would be fun to do a little exercise on this to really help you all with the next week. And we're going to apply it right now. So stick around with me. We are going to pop out of this. We're going to go over to our TradingView chart. And we're going to do a visualization imagining that there is a further correction in Bitcoin. And how you're going to manage that, what that's going to feel like, all those types of things are really important. First step that all the research says in visualization is it's really important to set the scene. So right now, I want you to imagine you are logging into wherever your investments are kept, whether that's Coinbase, whether that's a self-custody wallet, whether that's a stockbroker exchange. Imagine that process of logging in. Imagine typing in those numbers. Actually look at the app if it helps you. Get yourself in that frame of mind. Now, I want you to imagine, I'm just going to take a bar pattern on this chart, and I'm going to do this. Okay, I want you to imagine you've logged in, you open your phone, and this is what you see. Bitcoin at 87.75. Okay, that's what you see on the chart. How do you feel immediately? Are there maybe feelings of fear creeping up? Are there wonders of whether you should sell? Are there feelings of panic? Are there looking at your position losses and imagining, what you could have done with that money? What goes through your head? And I just want you to take 10 seconds and really think through that initial reaction. What do you feel when you see Bitcoin at 87K when you open that trading app? Okay, now that you've kind of felt those feelings, I want you to imagine that Bitcoin has gone down here, and you've decided you're not going to sell. You feel confident, you're feeling okay, you recognize that nothing has changed in the market. It's just a short-term shakeout. How does that make you feel? How does that conviction feel? What is it like to go through that? Is it potentially scary? Do you feel like it's gambling? Do you feel like it's irresponsible for you to hold at a lower valuation like that? Go through those repercussions in your head now. I'll give you about 10 seconds. Okay. And now I want you to imagine feeling really comfortable at those levels, feeling okay at 87K, feeling like, all right, I can respect this. It's not where I want to be, but it is what the market has done, and I don't have control over anything but my response to it. How does that feel? Does it make you feel a little bit more relaxed? Does it make you feel a little bit more confident? Do you feel like you're part of a group or a team? All those types of things. And now I want you to imagine this move. Over the next week after that capitulation, we get this bounce up, almost touching 100K again within a week. And how does that feel? And how happy and pleased are you that you held through that volatility and that you didn't let the really fear, uncertainty, and doubt get the best of you, and that you're right kind of back on track? Feel that for about 10 seconds. Okay, so that's the end of our visualization. I hope you found it helpful. And I want you to, notice if that changes anything in this upcoming week. If we get some major downside volatility, maybe we do get moves down into the 80s. How much more, calm or relaxed are you by that move than if you hadn't done this exercise? I would love to hear down in the comments if you found it helpful or interesting, and if I should keep doing them, because I think, even just conditioning ourselves for the possibility of that before it happens lowers that fear, uncertainty, and doubt so much if it does go that way. And I think it's important to be prepared for the worst and hope for the best. So hopefully that is really helpful to you all. I really appreciate you tuning in. Would love to earn your subscriber status or likes if that's something you're interested in, and happy to get video ideas or chat about further things coming in the market. I think we'll be back in euphoria and excitement here soon. Just can't tell you when exactly. I will keep you posted on the labor markets numbers coming out, and we'll talk to you soon.